Well, that's the funny thing. I was actually talking to someone about this the other day, and that when you're doing this whole entrepreneur thing, you don't even know what day it is.
Not at all.
Every day's Friday. Every day's Friday. Let's see. Ron says it can't unmute. I thought I had set everyone in. It should be open up, Ron. Try unmuting yourself. Is it working? Oh no, I think Ron is no. Oh boy. All right. Well, that's not good.
Well, there's other. Oh yeah, I don't see.
That's so weird. I said, okay, unmute all. Okay. I just set everyone to unmute. I just hit unmute all, guys. So.
Okay. Can you hear me now?
Oh yeah, now I can hear you. All right, good.
There you go.
There we go. All right.
But it looks like most people are still muted. It looks.
Yeah. I think they might have just muted themselves because I unmuted everybody.
Yeah.
Yeah. The error message I was getting was the host had muted us, and then once you've unmuted, we're good to go, I guess.
Unmute. All right, Peggy, you're I cannot unmute myself because you have me muted. You should be unmuted now, Peggy. She just muted herself. All right.
Right.
I just want to make sure everybody's unmuted, so that way you can just go ahead and talk and do whatever. So good. Well, thanks for coming out, guys. I really appreciate it. We've got a very good turnout here today, and I appreciate you guys put up to hear Sterling. Sterling's got an amazing story of how he was able to start from zero. Start from zero and grow his portfolio. And a lot of it's through partnerships. A lot of it's through mentoring and just a whole lot of hard work. But maybe before we go into that, I want to just say hi to a few people. Mark, it's always good to see you. Good to see you again. Hopefully you can hear me all right. Of course, Paula, Peggy, of course. Kyle, you're new here. I don't think I've seen you here before, right, Kyle? You're muted. I can't hear you. Are you able to unmute? Oh, shit. All right. All right. I just unmuted everyone again.
Okay.
So
I can hear you now. I'm unmuted.
All right.
Oh,
you can hear me? Now you can hear me talk?
Now I can hear you.
All right. Good. Thank you. Thank you for giving me the gift of speech.
Oh boy. All right. Kyle, how you doing, bud?
I'm fantastic. Life is beautiful. How are you?
Good. The same, man. The same. Is this your first time?
It is.
Excellent. Welcome. So are you new to multifamily? Have you done multifamily before?
No, I'm new to it. I'm actually looking to buy a multifamily right now. I'm in the process.
Excellent. Where are you at? What what part of the country are you in?
Las Vegas, Nevada.
Okay. Interesting market.
Yeah, for sure.
I don't know that much about Nevada. How is the market out there? Is it like really crazy? I guess like everywhere else, but like, are you still able to find good deals out there?
I haven't found any deals yet. I'm actually working on my first home, so I'm still in the learning process of real estate.
Excellent.
So,
Excellent. Okay.
How still looking, learning as much as I can before I buy my first home. So.
Yeah, that's the secret. You really have to learn how to do it. You have to learn the language of real estate. That's the biggest thing, is learning how to speak the language of real estate.
I'm muted right now.
And really, when you talk to brokers, talk to investors, speak in a language that they understand, but also be able to speak the broker speak. Otherwise, they know right away, oh, this is a newbie. Then they'll ask you for the dreaded comfort letter, or not the comfort letter, your proof of funds. That's how you get the proof of funds to talk, is because if you sound like a new guy, that's what happens. So, but you overcome that by building partnerships, which was one thing that Sterling's going to talk about today. But also, when you talk to a broker and you say something to the effect of, "Hello, Mr. Smith. My name is Kyle. I work with a group of wealthy investors, and we're looking to expand our business in Las Vegas, Nevada. We're currently working with ABC Property Management. If you have any other assets, we're trying to target B and C type assets. Let me know. I'd love to get in front of you, and maybe we can talk about what type of stuff you have or whatever." But if you say that confidently, and not talk about cap rates. That's the whole cap rate discussion. It is the biggest giveaway when it comes to newbie alert. That right there. What cap rate you looking for? You immediately give away your position, because to a real estate investor, it's not about cap rate. Cap rate's one thing that we're concerned with, but it's not first and foremost. It is one thing that we're concerned with, but not, I mean, I don't really consider cap rate as important as what's the NOI? The NOI, you live and die by the NOI. I'm getting a t-shirt made like that, Sterling. Live and die by the NOI. That's what's important. Please tell me you can unmute yourself. Can you do it? Oh, man. I just unmuted everyone again. I don't know why this is happening. I don't know why.
Now I am officially unmuted.
All
yes.
Yeah, good. Oh, that'll make you a lot easier to tell your story. Well, I'll tell you what. I think we pretty much have a good sized crowd. I guess the floor is yours, man. I'd love for you to open it up and tell everyone about yourself.
Yeah, so we will go ahead and open it up. Thanks everyone so much for being on here. Those of you who do not have the cameras on, let's turn it on and see everyone's lovely faces. Yes, I am one of those individuals. I've done so many Zoom calls, it is ridiculous. So it's always great just to see others' faces because we're not able to, of course, engage and be in person. Oh, we got someone on the non-muted. Okay. All right, so to give everyone just a little background on myself, and Augustino, will we be doing some Q&A throughout here? Wait till the end, or
everybody's muted right now. But that's the thing, guys. If for whatever reason you want to ask questions or whatever, it's an open forum. Go ahead and just shoot me a message, and I'll try to unmute you. I'm trying to unmute everybody, but I think it's just muting automatically here. So just go ahead and shoot me a message, and I'll knock it out. Okay. But
yeah, and
by all means.
And any questions that you have, you can, if you're a little bit shy, you can put them over in the chat as well. But just a little background on myself is name is Sterling White, buy and hold investor, born and raised in Indianapolis. So Midwest, had a single mother, have a single mother, fraternal twin brother. And the environment that we grew up in just wasn't the best. Grew up on Section 8 housing, food stamps, and any other type of government assistance. I'm sure my mother didn't tell both my brother and I about. And I'll give you a prime example of the type of environment I lived in. There was one point where my brother and I, we're about 5 or 6 years old. We're sitting at one of those little multicolor like Fisher Price tables. And it seemed huge at the time as a kid. And as soon as we get done eating dinner, we go upstairs and a bullet comes right through the back patio where we were sitting. So I may not be here, he may not be here, but at the end of the day, decided to use that as fuel versus being a product of the environment. And my very first product, and this is how I got into entrepreneurship, because were you going to say something, Augustino?
No, I was just looking at the chat, that's all.
Okay, gotcha. Is had to figure out a way to earn money. And this is where because in the legal sense, because there was tons of illegal activity that was going on around, and mother didn't have enough to buy the cool things that I wanted at that time. So first product was Kool-Aid. Second was Pokemon cards. And yeah, that's how I got started in my entrepreneurship journey. And on the real estate side, this was 2009, where very similar times of this. Of course, there's some different moving parts with that, and got started in getting my hands dirty on the construction side. And that's when I ultimately fell in love with real estate. Shortly after that, in 2013, bought my very first single family house. And I was 23 and no money out of pocket. Actually found a mentor who I started working with for completely free. In essence, was able to get that mentorship, and they actually funded the purchase price as well as the rehab of that very first deal. Because one, I didn't have credit, which credit's not really too much of a factor when it comes to that, but mine when you pulled it, it wouldn't even register. So I would ask the person when I would apply for a cell phone, for instance, what was my credit score? They would say nothing. And I would say, well, there's got to be something. They're like, no, you don't have anything. So I don't know if that's better or worse in terms of that. And had no money because I over withdrew my bank account, just not being financially smart. However, this is about partnerships. One thing that Augustina was mentioning earlier is I knew what my strengths are and what my weaknesses were, and found someone to complement those weaknesses. So fast forward, scaled to 150 single families. 2017 made the complete shift to multifamily. Very first deal was a 46 unit, and then scaled portfolio just under 600 units. Today, portfolio is just under 400 because exited out all the single families, and valuation is just under $20 million. And yeah, why I'm telling you all that is just to give you some background on myself. One thing is I'm not perfect by any means. I still make mistakes to this day. And yeah, I want to share those successes on tonight's stream that we do have, and more than happy to answer any questions anyone has.
Yeah, well, you know what though, certainly let's take it from the beginning for some people. Some people I recognize, some people I don't. So, but one thing is for certain is that, and you touched on this, the partnership angle. Like we've known each other for a little while now. I know that you relied heavily on partnerships, and you touched on it a second ago. You had zero credit. You have no credit at all. Very hard.
No money in the bank. No money in the bank either. Negative money.
Yeah, you have zero.
Actually owed the bank because I overdrew it. So even worse.
Right. But yet you still got into it. So let's talk a little bit about that. What exactly? How exactly did you establish those relationships? What type of thing did you do to really get the attention, to bring value to that partner, really get them to take a step and believe in you? And more importantly, how long did all that take?
Yes, it took a while. It was not one of those just on the fly type of things. And I would say just from all the things and lessons I've learned from real estate, I no longer have hair. I've got a nice little glare that's going on just like yours. You got a glare too. Yeah, there we go. But just kidding. But so that first relationship that I had with that mentor, it was 5 to 6 months of us. So this was at a CrossFit gym is where I met him. So I'm a firm believer of this other quote that says, when the student is ready, the teacher shall arise. And that's exactly what happened to me through that. So we worked out a couple times. And during this time is I want to take a step back in terms of I had this very pivotal moment in my life where this was when I was shifting from construction to the investing. And right before I found that mentor is I was at this college party and just having a good time. And through there, I ended up getting on the boat and being in the middle of this lake. And through that is there's this question, and I'm away from everyone. It's just myself. There's this beaming question that comes down to me and says, Sterling, is this what you want to do with your life? And I answer back to that question, no, this is not. And since then, I was just drifting into average land. And since that point is I cut off all my friends because they were not going where I ultimately wanted to go. Secondly is I cut out the news because so much negativity with that. And then on top of that, I started on the self-improvement side with filling my mind as much positivity as possible. And so through that is I just want to get everyone up to speed on that. And then that's when I came across this book, which was the 4-Hour Work Week, read that book and got out of it is picking a goal that scares the living crap out of you. So through that, I picked this world record, which was the world's fastest fireman carry mile. No, I'm not a fireman. And I was training at that CrossFit gym. So it's like all this started converging at once. And that individual, my mentor, I worked out with him a couple times, and it just was at one point in time, I saw he was always talking about construction. He owned some multifamily, and just one point in time, I asked him out to Subway, had no clue I was going to pay for it, and said, how can I be of value to you in your business? And the kicker is you don't even have to pay me for it. So that's how it all started.
Well, you know what, though? Something there's a lot to unpack there.
Yeah, exactly.
But right at the beginning, though, you made a decision, right? The whole average thing. And I think that's probably one of the biggest issues that many of us, myself included, when I was in Mr. Average Land, I would be that guy that was working the 40-hour, 50, 60, 70 hours sometimes a week, come home exhausted, sit in front of the TV, have dinner in front of the TV while watching some crappy TV show, pummeling your head with ideology, go to sleep. And you're doing that Monday through
Do it
Friday.
all over again.
Yeah. Saturday, Sunday, you're trying to catch up from all your stuff. And Sunday nights, I remember, man, I was dreading Monday. I was dreading it.
Wow.
I didn't want to do this anymore. I hate this. I hate my life. Right. But that's what we've been accustomed to, conditioned to.
Programmed.
Right? So that's part of it, is that's breaking out of that cycle, breaking out of that cycle. And I think everyone who's not into real estate right now here probably at one point in their life felt that way. That's why it's like this whole real estate thing. It's not easy. That's for sure.
Oh no, it's not like on HGTV. No, please.
Right,
don't,
nothing
no.
like that. No one's taking down a sledgehammer to a wall or anything else like that. That's not happening.
Everyone sees he just took down 150 unit, 100, but no one sees all the mundane day-to-day activity, getting kicked in the face, all the rejection that led up to that point. But it's possible for everyone to do it ultimately if they have the grit, the persistence, and the belief in themselves that they can accomplish that.
Right. But I think something that you did early on, though, when you went to that Subway, you paid for dinner or lunch or whatever it was, a sandwich or a pop or whatever it was.
If I remember, he actually paid for it, because I really don't know. Yeah, I'm pretty sure he paid for it.
But you should have paid for it, right? You would have paid for it.
I was super broke, but yes.
Yeah. But then what was interesting is that you said, I'll do it for free. I'll do it for nothing. But then you actually perform in doing it, right? Do you think that conversation would have went differently if you would have said, well, I want $5 an hour, or I want something or whatever? That conversation would have went very differently, right?
It wouldn't have gone much, because when I said for completely free, the very next day I was in his property management company, which he ran those operations out of one of the units of the multifamily property that he actually managed. So who knows if I would have said, hey, well, you could pay me $10 an hour or however it was. And at that time, I'm a minimalist. Where I live, it looks like I literally just moved in. So I was actually living in my friend's den at that time. And we actually had an Amazon business that was going on at the same time as business partners. So I had low overhead, and I was just looking long-term at the end of the day, because I was just making the transition, or did I drop out of college? But I ended up in college when $30,000 in terms of debt, got nothing from that. So I was willing to, I got so much, I would say $1 million worth in terms of that mentorship I got from that individual.
That's right. But I think part of it is that's probably a big nugget right there, is that, and I've had people approach me too. I'll work for free. And then it's like, all right, well, here's a small task, a very small, find a place. This is someone out of state. Find a place in South Florida. We can start operating our meetups locally out there. Right. And maybe it wouldn't even do that. It couldn't even simple.
Gotcha. I love that. I love that. Just giving simple tasks. I like that. Yeah.
And see but he couldn't even do that. So that's the point, is that if you're actually going to do it, you got to perform, but you actually pulled it off. You did it.
And it was one of those things I figured out what the value was versus going to that person and saying there was, Sterling, I need help with this. I need help with this. One value that I really brought, he was more of a old school operator. I brought the digital presence online to his units. It may sound very common practice, but I was the one that would go into his units, take pictures, take video, to list that on HotPads, Trulia, Zillow, and that was something I brought because I was a younger millennial, and he was more of an older school operator.
But you know what, though? That's actually a good point right there, is that if you're able to analyze that person first, get to know them a little bit, stalk, like nowadays you can cyber stalk them. I don't know if you, back then maybe you couldn't have, I don't know, but at least get an idea. And that way you can go up to them and say, look, Mr. Jones, I know that you have XYZ, or this is how you do it. I could bring this to you. Just set me loose and I'll take care of everything.
Yeah, I agree.
That kind of thing. I mean, you did it a different way. You asked him, hey, how can I help you? Right. So James is asking here, what did he ask you to do at first? Like, do you remember your first few tasks? I know it was a while ago. Do you remember what exactly you did?
It was really odd jobs. So helping with managing his maintenance team was one thing. The primary focus was finding him a single family deal. Because interesting enough, he was looking to diversify from multifamily to single family. More so people do single family to multifamily. So that was one thing I was helping with, is just driving leads and then pushing them to his side. But other than that, I was helping out with a lot of the day-to-day mundane things with the property management company, helping with this accountant. I was going to the specific units that he had with getting the, one, I was also cleaning. He allowed me to stay in one of his units and also clean around the common areas too. So that was something else that I was doing.
Yeah. And that's the thing though, too. It's like, even in today's world, if you're a good writer and the guy has no content, when I say guy, I don't mean just guy, it's guy, girl, whoever it is, I don't care. But if it's a person, whoever the person is, all right.
Yes.
If you go to their website and the website sucks, it's terrible. Hey, you know what? I'll rewrite all your content for you. I'll just do it. Or better yet, just do it.
That's what I was going to say. Just do it. Yes, exactly.
Just do it and send it to them. I mean, if you think about it, 400 units puts you on a whole different path. And it all started just by doing stuff for people. I think that's one thing that, again, society says, oh, you have to get something for something. I get it. I understand that part.
I think that's the wrong thinking, but yeah,
it's the wrong thinking. Yeah,
nother,
it's like, you kind of have to prove that how hungry are you for real?
Exactly.
You know? I mean, I buy gifts for my partners all the time. Even today, I still buy gifts for them. Hey, did you try this coffee out yet? No. Here, I'll buy it for you. Like a bag of coffee or an espresso maker or something. I'll buy a whole espresso maker for the guy.
And then from your side, you're not doing it to get something in return. It's just more of those just giving.
Just giving. There's nothing wrong with that. You can always buy food. You can always buy dinner. Think of it like this: buying food and drinks and all that stuff. Every single person on here has done that. And then it's kind of in society today. It's kind of like it's someone has to pay the bill. So it might as well be me or you or someone, but it's not really taken as seriously as a piece of like something, a physical object sitting on someone's desk or on their stove or on their countertop that they see every day, that they use every day, and they think about you. A lot of power in that, right? One thing I've done too is after doing a deal, I'll send the broker a book. I'll order a book online, send them an interesting book. Hey, I saw this interesting book. You should take a look at it. Here. Just give it to them for free. If I know they love Ferraris, I'll go to Amazon, buy a book on Ferraris and send it to them. Drop ship it. Best $20 you'll ever spend in your life. I promise you. Buy relationships. That's it. As a matter of fact, it's funny. My first relationship, one of my first relationships in this business was with a broker. He owns the biggest brokerage house in your neck of the woods, Resource Commercial. You know what they are.
Gotcha. Uh-huh.
So the chairman is my good friend. The guy who runs that company is a friend of mine. We had drinks when I was still living there in Indy, and he told me his daughter wanted to do a
You're not talking about different relationships now. Okay,
improv.
I'm just kidding.
No,
okay.
Improv. No, we're doing improv. I just saw a question and my brain froze for a second. Anyway, so his daughter wanted to do improv, and I'm like, as soon as I get back to the office, I ordered a book on improv and sent it to him. Right. And that was
perfect.
that was 6 years ago. And we still talk all the time because of that one $16 book, amazing. That's never be stingy and buy people stuff.
And one book for those of you from a tactical standpoint, that was a game changer for me. That's also helped from a content marketing standpoint is Jab, Jab, Right Hook by Gary Vaynerchuk.
Yeah.
Huge, where the jabs ultimately are the value and the right hook is invest in my project or or do the coaching or whatever your services are. But the original title of that book was supposed to be jab, 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 jab. There was supposed to be no really right hook, because I feel just on the content marketing side or even relationship based is being so giving to that other individual and not expecting anything in return. And they will, if it's a fit, they will return whatever favor it is tenfold of what you've given to them.
That's right. Well, and part of it is that, to reflect something that Peggy just sent me a message here. She gives her residents an anniversary gift every year, which is beautiful. It's again, cognitive biases. If anybody watches the podcast, listens to the podcast, I mentioned cognitive biases from time to time. Cognitive biases are the shortcuts in our brains. Every single person has it. All right. Our brains are designed.
Not me. I don't have any shortcuts. Just kidding.
Everyone's got a shortcut. I shouldn't say design. That's the wrong word, but our brains want to conserve as much energy as possible, right? So these shortcuts, these shortcuts are in our brains. So that's how we're able to, if you're driving by a restaurant and you see there's no cars there, we immediately think that restaurant must suck. But maybe they just opened. We don't know, right? But our brains are designed to say, okay, well, that's a social bias. If there's no other person there, that must mean there could be an issue with that place, right? So social bias. Now, there's also the reciprocity bias. The reciprocity bias says that if you do something for someone, they almost feel compelled to do something for you. So in Peggy's case, when she gives that anniversary gift, even maybe it's a bag of food, maybe it's something, I don't know what it might be, but whatever it is, when she goes to give them a bump in their lease, they're not going to say, yeah, you're such a bit. They're not going to do that because people are going to remember the fact that she was nice to them. She treated them well. There's the occasional nutcase, I know, but for the most part, it's the reciprocity. You can't overcome that. It's just there's a whole bunch of cognitive biases that when you know and understand, you're able to apply them in this business and any business for that matter. It's just awesome. It's amazing. Yeah. So anyway, Sterling, getting back to your story then. So you start running around, you start doing the single family home thing, and you start helping him basically bird dogging.
That's exactly what it is. Mm-hmm.
Yeah. So then what happened after that then? So how much of that did you actually do before you were like getting into actual deals with them?
Yeah, so it was about 2 to 3 months where I was just in the phase of I was attending local meetups and really networking with the wholesalers. I was picking specific neighborhoods to then start the direct mail campaigns to. So I was using these various channels to get deal flow in. In essence, the very first deal actually came from a wholesaler. Interesting enough, during that time, you could actually get good deals from wholesalers. It's very slim nowadays. However, the deal got sent over, and this shows you my level of sophistication at that time. I was using back of the napkin math. I was using the 1% rule, which the 1% rule is let's say your all-in closing costs as well as rehab to a house for $100,000. Your expected rent is $1,000. In Indianapolis, in neighborhoods just above the ones that people would consider the ones you would shy away from, the war zones. In essence, from that is you could get the 2% rule, meaning you could buy a house for $40,000, be all into it, and then rent that for $800. So that was the very first deal. The wholesaler sent it over, $25,000 rehab. $25,000 is the purchase price. The rehab was $15,000, and the expected rent was $800. So from that, sent it over to my mentor. He approved it, and then that's how we ended up funding it. And one thing I want to mention quickly is that trust but verify, because that rehab actually ended up being $10,000 more. But that's another story in itself.
Right. But you made him money. In the end, you made him money. Yes,
exactly. And instead of taking a wholesale fee, I was able to retain equity. So he got majority, 90%. I got 10%. And this was, I would say, is where I really got my education in the boatload of that mentorship. After that property closed, Sterling, go figure it out. Yeah. That was it. Yeah. Yeah.
And then you have skin in the game now too, though, right? Now you got skin in the game. Now it's like you can't screw it up because now you're a part owner. So that's an interesting thing. Was it his idea to give you the equity, or did you ask for it?
I asked for it. Yeah. I asked for it instead of just taking a wholesale fee, which could have been anywhere from $2,000 to $3,000. I thought long-term, no clue why I thought long-term, and was able to requested equity, but that's what I ended up going for.
Well, that's smart though, because now you got a partner. That's the thing. The partnership is way more important. It's, I think it puts it in a very different, how should I say, a very different light if now we're partners versus just a guy that you paid.
Oh, for sure. It's the
Yeah.
same thing with I like to call them team members instead of employees. If you there was one individual who was our formerly she was our property manager, and then she was absolutely crushing it for us because my partner and I built our property management company. Her formal company offered her more in terms of the salary. We actually brought her back and gave her equity, and her production went even more up.
Nice.
Equity in the company.
Yeah. And that's, so again, skin in the game, right? And by the time, so obviously you sold that, you sold that property now, right? I mean, it's been a while, I guess.
Correct.
How much money did you make off of it compared to what you would have got at the beginning?
So that in particular, I sold that one in addition to the one across the street. I sold out of the actual partnership itself, and then started on a separate path where I was able to scale up the portfolio of 150 single families.
Okay. Well, let's talk about that then. So it sounds like then you got some powder, and you're able to get some cash out of it. So what happened after that then? How'd you get into that big, the first bigger deal then, getting out of the whole single family game?
Yeah, so it started with driving for dollars. Took a step back, and having that many single families, just under 150, is quite labor intensive from a standpoint of management. So both my partner and I built a property management company, and also we were still doing the acquisitions, which are two different animals in themselves. So we took a step back and said, hey, where do we want to go at the end of the day? And so through that is we looked at multifamily. And then with the company I have, Sonder Investment Group, is where we had identified apartments that were, I would say, smaller size, 20 to 50 units. And then we picked a nearby neighborhood and then started the driving for dollars approach. Found a property that needed work. It was 46 units. Pulled the public records. Saw his own LLC. Skip traced the LLC. Picked up the phone and gave the owner a call. And this happened to be their last property that they were selling. So they were motivated.
Interesting. That's a hard way to find stuff, by the way.
Oh yeah, it's a process in itself.
Yeah, because I mean, right now the way I do things is just through brokers. That's how I do it. But that methodology, you just happen to catch them at the right place at the right time. That's it, right? So,
and there was a ton of other deals and all that before that too, and was taking the traditional route with brokers. However, things just weren't penciling out. So it could have been those things, hey, we could just sit on the sideline and wait for a correction to happen, or take more control in our own hands.
Right. Well, there's always a deal in every single economy and every single cycle. Yes. There's a deal everywhere. You're always in business. I don't agree to ever sit on the sidelines and wait. I don't agree with that terminology. I know there's people out there that say that. That's a load of crap to me. I honestly believe every single market has a deal in it. Every single one.
Yeah. And I feel those people that do wait on the sidelines and say, well, I want for a correction to happen. Let's say it does happen, they'll say, it's actually not the right time to be buying, because that's how I feel on that side.
Well,
there's always plenty of opportunity.
And I'm not saying this just for the sake of saying this. During this whole Corona thing, I'm going to lock up 200 units. I'm waiting for the PSA for that. And then I'm locking up another 100 units. So during all this stuff going on right now, so turmoil in the markets, all that crazy stuff. Yeah, there is. I'm not even including the other big deal we're working on downtown either. So that's coming too. Every single market has a deal to be found. So Ron's asking here, apartment buildings or multiple buildings? I think you're probably referring to the last one, Sterling. Your last one was a one deal, right?
Yeah. Can you hear me as well, Augustino? Can you hear me?
I can hear you. You're just frozen.
Okay. Yeah. This Zoom, I did this update on my laptop, and Zoom oftentimes crashes. Can you still hear me?
Yeah, I can hear you.
Okay, well, we'll just keep on rolling with the punches until this possibly doesn't work. Okay, all right. So what was that one more time, Augustino?
So Ron is asking about apartment buildings or multiple buildings. I think it's probably when you did your first deal, you're doing that driving for dollars thing, I imagine.
Yeah,
maybe describe it a little bit more.
Yeah, so it was a 46-unit apartment in which it was 2 buildings. In each of the buildings, there was 23 units, where it was 68% occupied, of which 8 of the units were actually down due to fire damage. And the fire all started with the resident who was cooking chicken. interesting enough. Yeah. And then the remaining of those units, there was a total of 15 that were vacant. 8 were due to fire, and the other ones was just due to the owner just in essence just mismanaging it.
Wow. How'd you know that that was a unit that you should be calling on? Like typically there's dead giveaways like high grass or stuff like that. But how did you know? Was there a giveaway when you were driving for dollars?
Yeah, and I wish I could share my screen if this was still not frozen. It's so interesting. But the approach that how it looked was the signage was outdated, meaning that it was I believe it was gosh, what was I going to mention? The signage was in disarray or faded. There we go. It was faded. The parking lot looked like an alligator's back. And when driving past the property, it looked very bland. So from that, and also in the masonry, there was quite a bit of stair step cracking. So from that's when it was just those indicators that this needs some love. And then that's when made the decision to pull the public records to give them a call.
Yeah. And that's the thing though, too. On those smaller deals, it's kind of hard to find financial information. On bigger deals, a little bit easier because sometimes it gets reported to CoStar, and you can figure out how much they paid for it, what they're in for, all that fun stuff. So we got a couple of questions here. So what's your take on lease options, and if you had any good or bad experiences? Well, I know I'm doing one right now. It's going to be a master lease deal. So I'll let you know in about 4 years. But
I don't on the
surface, it seems
insight on that.
Yeah. Say again?
I wouldn't be the proper person to provide insights on that. I would say that would be something worthwhile to post on BiggerPockets. If you're not on there, it's a completely free resource. And also they, of course, have paid and all that. But I mean, you could stick with the free and ask a question such as that in the forums and get so many different people to provide a experience share on it.
Yeah. Well, I can tell you this, depending on the deal, you could sometimes do a master lease option. So let's say, for instance, you're getting into a property and the seller has, the seller has a lender that won't allow you to sell it for one reason or another. Maybe it's cross collateralized with another property. Maybe they can't sell it because the occupancy is so low that no bank would even finance it anyway. So meaning that if you're trying to buy a property, let's say I was going to buy a property from Paula's got a property, but it's at 50% occupancy. My lender is certainly not going to back that deal up. If she wants to get rid of it, she doesn't want to deal with it anymore. I could do a master lease from her, right? Come up with a payment, whatever it might be. Maybe she says, you know what, listen, just here are the keys, just make the payments to me and I'll make the payments to the lender. Super. Yeah, I'll take the property over, turn it around, fix it up, and then refi it in like 3 years or something like that. That's a master lease. So that's a simple structure. I mean, I'm going over the highlights here, but that's one way you can do it.
Got it. And that very first deal was actually seller financing to where it was the total purchase price was $900,000, of which $200,000 was put down. Owner owned it free and clear, so they carried back $700,000, and both we had raised $685 to take care of the capital improvements, of which a portion of that went towards the down payment.
Yeah. And Ron, you can pay the lender directly too. That's the thing. I mean, of course, and I'd probably be more comfortable paying the lender directly too, by the way, instead of paying the company. Now it depends on the deal though. The people that we're going to be dealing with, it's a very large real estate investment trust. So I don't worry about them necessarily stealing our money. I'm not worried about that. But yeah, that's true. I mean, we'll probably just pay it directly. Let's see. And then Peggy's asking a question here. So fast forward to today then, Sterling. So Peggy's asking, how do you typically structure your deals with investors? How do you split the equity?
Yeah, so Augustino, one thing that I'm doing is switching it over to my phone instead so everyone can see me. I just thought about that. I think that'll be actually more beneficial for now.
Okay. I'm going to remove you. I'm going to put you in the waiting room. There you go. There we go. I just put you in the waiting room. Good. So,
Okay.
so
Perfect.
So
Awesomeness.
Peggy had a question here. She's let's fast forward to today for a second. How do you typically structure your deals with investors? How do you split the equity, and what is a preferred return?
So I have actually personally shifted away from the more so on the preferred return side, and I just keep it straight equity, where it could vary anywhere between either way the investors get majority of the deal, meaning that the most the most recent one was 85% went to the investor partners, and then 15% went to myself as the general partner. So they were the limited partners, and I was the GP that had 15%. I've done the preferred return. Preferred return goes either way, but I vote to just keep it simple.
Yeah, and really, Peggy, it depends on the deal. It depends on your level of experience too. I mean, I've interviewed guys on the podcast. They've been doing this for years. They're managing A-class assets, and they're giving the LP 65%. Sometimes 60%. So it varies. It varies on who's doing the deal, what the deal is. I mean, there's a whole lot of variances. That's the thing. This guy, by the way, he was doing like A-class assets with very had good returns, but still you're talking what a 5% return or something like that, but it's again, it's a nice A-class asset. Let's see. Okay, here's a good one for you, Sterling. This is a good one that Jay's asking. What online sources do you find the best and most useful when it comes to deal sourcing, like Trulia, Zillow, Craigslist, etc.? Like, do you have any online resources you use, or offline, or what?
My by far favorite one is actually Reonomy, and in terms of how you spell that, REONMY, somewhere along that. Yeah. I always misspell it, but
I'm gonna put it in the chat.
The source. Yeah, that's the source I use in terms of being able to pull the data, and from there it's more on the commercial side. So I'll go there. You can pull in Indianapolis, Indiana, apartments from 75 to 200 units, and then from there I filter from all the ones that haven't sold in the past 5 years to filter it down, and then also I'm looking for the workforce housing. So that have the rents between $700 to $1,000. That's what you would get outside of it in terms of the rents. And then one ninja thing too is to actually go above and beyond. Because the thing is, with using these data providers, there's been a apartment in there that's classified as a 2-unit that's actually 102 units or over 100 units.
Wow. So that means what you're doing is you're finding that you may just do a double check, go to Google Maps and actually see what the size of the deal is. And if it's gigantic, then they're not a 2-unit. But this looks like this Reonomy thing. This Reonomy, they charge you like $400 a month or something, right?
You have to do it all up front. So you have to do the year up front. And the same thing is with CoStar too. Even CoStar, their data is not, with these providers, it's always hit or miss. Prime example with CoStar, I actually had one of their reps in one of the apartments I have here in Indianapolis. And I said, could you pull the owner information on this? And I had owned that for a year and a half. And that wasn't my contact information was there. I said, by the way, don't add my contact. But that's just one of those things that you still have to go above and beyond with doing the initial research. And also on Reonomy is you can team up with someone to where they pay half, you pay half. I've always taken that part and just collaborating with other versus putting that cash out. Yeah.
And you know what, though, the great thing about these data sources is that, I mean, you can always verify it. It's okay to pay for data, pay for data.
I agree.
When you're starting out, it's not necessarily you have to go like spend $400 on it's $400 a month. Looks like on here.
Oh, it's month now. Oh, okay, perfect.
Yeah, Reonomy, $400 a month. Yeah. But at the same time too, when you're starting out, you don't have to go spend $400 a month to start off. I mean, really, CoStar, if you have a good relationship with a broker, like a really good relationship, your broker's got access to CoStar. So
Mm-hmm.
ask them if they can go ahead and run a report or whatever. But you have to do that. You have to have a really good relationship with them. Like take them out for drinks and cigars and food. They love to be fed. They love to be fed, right? So do that. It'll be totally worth the, but I don't even know how much CoStar is. I mean, what is it like? It's like $1,000 a month or something. It's not cheap.
Yeah, it's not cheap by any means. And usually in order to get CoStar, you have to have apartments.com with them, or you have to have already an apartment or something. There's some specific nuances with that too.
Yeah. I mean, I use my partner's CoStar, so I don't need to have my own. But it works out well for me. But they're hunting me down, man. They're emailing me. They're friending me on LinkedIn. They're calling me. They're blowing up my phone. Yeah, it's worse than a jealous girlfriend. It's crazy. All right. Well, let's see. Peggy's asking, Sterling, what is the average amount of money you want to earn per door when syndicating?
So in terms of on a per door basis, I look at it as more on a return. So looking to be on the, on the investor standpoint. So that's what I look at it more so. So like the IRR to be closer to anywhere between about 15 to 18%. And then the cash on cash to be closer to about 11 to 12%. And that's not including the refinance. That way there's enough money for the investors to get double digits. And then also myself as the general partner to also get a good split as well.
Yeah, it's interesting you say that, because at that return without a refi, which you typically do in what, year 4, 5, or 6,
exactly.
Then your cash on cash goes up a lot.
Mm-hmm.
So you're being super conservative on your numbers, it sounds like then, right? Because when you do that, your cash on cash should be approaching like 18%, right?
Yeah, unless end up pulling out all the money, but what you said, correct.
Yeah. Okay. Let's see. Jay's asking a question here. What do you believe would be the most lucrative area for deals in post-pandemic environment?
House hackers. That's what I believe are people on the.
Well, Jay, maybe just to clarify, are you referring to like what part of the city, state? Are you talking like asset class? Like what do you mean by?
Yeah, there's
by
a lot to unpack there. But one thing
So,
is individuals, let's say, who bought a 4 or 5 unit that underwrote it as if they're gonna, and they did the Airbnb model. And the Airbnb model, of course, is dried up significantly, and they overpaid based upon that model. I feel if you can find operators who did that, those people are really going to be in trouble and definitely feeling it at this moment. And I feel that when the deals are going to start coming to fruition are going to be the next 18 to 24 months, not like a steal or anything like 50 to 60 cents on the dollar. But I feel right now there's people in forbearance that are going through that. And then other individuals are going to start facing the foreclosure. So I feel there's going to be a while, but that's one opportunity I see.
Yeah. I mean, the whole thing with the whole Airbnb thing, I never got into it. Not because I could see the future or anything else like that. I certainly did not, but it was too far away from what we were doing, which is the reason why I didn't do it. It's hospitality business. I want to eventually do a hospitality business. I want to get into the hotel casino business at some point in the future. Mark my words, it's going to happen. But I'm not going to do it using Airbnb. It requires a whole lot of focus, and this business is hard enough as it is, complicating it with trying to get Fifi and her daughter into your apartment. Why? Why? I mean, if there's so much opportunity to scale and grow this business that you don't need to be doing stuff like that. And if you do, then do it, but you have to go all in on that one thing. The focus required to do this is immense. I'm telling you, to do something big anyway.
And I love that you mentioned that, Augustino, because that's one thing for those of you who are on here, whether you're just getting started or maybe you're a little bit further along, is there's that book by Gary Keller that talks about the one thing, because many people get the shiny object syndrome where they're like, well, I'm looking to do mobile home park investing. I'm looking to flip land, or they're trying to do all of those. It's like you're 1 foot in, 1 foot out, because you're 25% efforts here, 50% efforts here, 25% efforts here. That's exactly what you're going to get back.
Yeah, that's right. That's right. So let's see. James is asking, any thoughts on Crexy? Man.
What is that?
Crexy's like LoopNet. It's another LoopNet. There's that.
Okay.
There's another one, 42 floors. There's another one. There's all kinds of them out there. Guys, listen, if it's on the internet, it's probably garbage. All right. I'm not saying you can't buy anything off the internet, but chances are this is not an internet business. It's still a relationship business. You have to get up, get in your car, go meet people, press the flesh, talk to them. I mean, there's even certain brokers you shouldn't talk to because well, at least I know anyway. I know what the broker's about because I follow the broker. I see the stuff that they're selling. So I know it's like, oh, if that guy's selling that asset, I already know what the ad's going to look like, and I know I shouldn't buy it. You know?
Oh, gotcha.
But it comes down to knowing your market. But Crexy's the same thing. So Jay actually clarified his question for you. So
one thing I would say when using those sources like a LoopNet or a Crexit, I believe is how you pronounce it. Crexy is to look at it as a prospecting tool to find brokers and agents. So you're looking for that 20% that actually do the 80% of volume. So that's what I found in this market in Indianapolis. There's a very select few of brokers that are actually doing majority of the deals. And you can go on a source such as that to find who the people who are actually have the most listings.
That's right. No, it's 100% true because there's only a handful of brokers, less than a handful in some cases, in some markets that really dominate a market, and they only work certain asset classes and certain asset sizes. Like there's some brokers, they're commercial brokers, but they only do 5 to 50 units. They won't do anything more than that. That's all they do. Nothing wrong with them. That's just what they do. There's other guys that only do 100 units to 500 units, and that's all they do. Then there's some guys who won't even touch 500 units because it's too small for them. They're all over the place.
Yes.
They're everywhere. So figuring out your target and then matching up what you're looking for to that target is huge. And yeah, you're exactly right, Sterling. What you do is you get on those websites, you look at who's selling what, and then you start. Don't call on them. You email them is what you do. You don't call. They're busy showing off deals, and they're getting hit up by every single newbie out of state and California saying, I want to buy a property. I want to buy a property at a 10 cap. Can you send me some?
That's exactly what I was going to say. And I want it to be off market.
All right. Don't do that. So Jay followed up his question here. The one from before, what do you believe would be the most lucrative area for deals in post-pandemic environment? He's saying, let's say New York. I'm assuming you're talking like New York City, maybe, or you're talking like upstate, or where exactly? Because New York City by itself is an entirely different market compared to the rest of.
Yeah, and it's not very landlord friendly, is what I've heard too. No. It's more tenant friendly and a lot of red tape. Yeah,
upstate New York. I mean, yeah. Listen, Jay, man, I don't. I've said this on a podcast. I'm sure it upset a lot of people. I would never buy anything in a blue state. Never. Sorry. If I don't want to get political, I just don't do it. It's
what is
very,
a blue
very
state?
Dangerous. What's a blue state? Democrat, heavy Democrat.
Oh, gotcha. Okay.
Yeah,
that's all
a red
politics.
State. Yeah. So that's why I'm saying it's politics, but
gotcha.
New York has a history of not being very landlord friendly, and typically happens to be a blue state. So same thing with California, same thing with Oregon, same thing with other states. That's why
is it Chicago too? Is that the same way? I know Chicago's not lit.
Chicago especially, but Illinois is also a very blue state. Yes, but and I'm not trying to be political, but
Call it
I don't know what to tell you guys. That's how it is. But Jay, you know what, man? There's every market has a deal, absolutely, right? The issue though is that you have to find the right price, and you have to. Part of it is, do you really, really want to deal with it? And if you're okay with dealing with it, then you have to price it. You have to build that into your price accordingly. I mean, that's the long and short of it, right? What's happening right now, especially on larger deals, is distressed assets. A lot of distressed assets. You're not going to find this in in your neck of the woods in New York, because many New Yorkers are coming here or they're going to other Midwestern states, and they're overpaying for stuff. And what they're doing is they're paying like $50,000 a door in a place like downtown Cleveland, where I know I'm like, oh man, that thing is like 25 a door. They just paid double. They didn't even know they did it. They don't even know they did. I know they did it, but they don't know they did it. And then they get burned.
Well, because the returns where they were they could be getting negative because it's just not penciling out, and they are okay with the lesser return. But I feel in the end, they're going to end up being underwater and getting caught up and then have to exit out of it. Is that how those chicks? Yeah.
That's right. So let's see here. Carl's asking, can we have Sterling restate his partnership structure in depth? They want to know about your partnership structure in depth.
Which partnership structure? Like
The one your
GP?
GPLP split, the 85-15, all that fun stuff.
Yeah. So how it works is out of the net. So it's paid on a quarterly basis. Let's say there's $10,000 in terms of that the property kicked off on the cash flow. What is it? 8,500 would go to the investor partners, and then the 1,500 would go to both my partner and I of that 15%. And then out of that, he is actually majority partner, so he gets majority of that 1,500, and I'm the minority partner. And then also when we exit the property, which we're more so on actually refinancing, that let's say there's $100,000 in terms of the profit, it's split the same way, 85-15. So it's just very simple.
Yeah. Okay, good. And I'm guessing that with all this pandemic stuff, you guys probably held back on your payments, right? Your quarterly payments and all that fun stuff, just the same way that Grant did the same thing.
And it's so interesting. So many people got a lot of, he got a lot of flack about that, but people don't understand that, hey, during these times, you want to have that cash just in case,
Well, part of it is that, listen, everyone on this call is a syndicator or wants to aspire to be a syndicator, or maybe is even a limited partner in a deal. They understand that our job is to protect the asset. We want to protect everyone's money and the LP's money included. Everyone needs to be protected, right? So when you do that, it's just all you're doing is pausing it just for a second, let everything fall out, and then you go back to normal, send out everybody's money and just keep it rolling it forward, right? That's part of securing the business. Same thing happens at people's houses, their own personal budget. It isn't like when all this stuff is happening, people are going out and buying TVs or brand new cars. Some people
are buying toilet paper.
They're buying toilet paper. They're saving all their pennies for toilet paper. That's right. But that's just how it is, right? Let's see here. Do they pay for the 15? Ron's asking, do they pay for the 15? Ron, can you clarify the question? I don't understand. So Mark's asking, how many LPs do you normally have on any deal?
It can range anywhere between 40 to 50. And the minimum investment is $25,000, and the average is actually around about 40,000. You have some people that invest a little bit of a higher amount, and the average raise, the most recent one was 2.8 million. And the one before that was just over 1 million. But yeah, it's always around that 40 to 50.
Okay. And do GPs, are you guys putting up any money in the deal too?
Yes, a co-investment. It'll range, it'll either be 50,000 or 75,000.
Right. But you're also signing for the debt too. I mean, you're taking on the risk of making sure that deal performs. Otherwise, the bank's coming after you and taking all your stuff.
So on these, yes, and preferred to go with the agency debt. So the Freddie Mac small balance loan. However, there's been several deals where they just pulled the rug and didn't really give any indication. So shifted to more of a regional bank who finance several of our deals, of which the initial, so there's an interest only period of 2 years, which that is strictly 100% recourse. And then after that, it actually shifts to 25% recourse, and the remaining is not non-recourse.
Oh, interesting. Okay.
Yeah. I had never heard of that before.
That's this is a local lender, you said?
A regional bank.
Regional bank. Who do you mind sharing who it is? I'm just curious.
First Financial Bank. Mm-hmm.
Oh, okay. Huh. That's interesting. Okay. They have good rates.
Oh yeah. I mean, they were very competitive. I mean, we got the interest only 2 years, and the most recent one was 4.25
Okay.
in terms of the actual rate itself. And that was fixed. And then also the AM was 30 years. So yeah,
Okay.
very aggressive.
That's pretty good. I have a contact at Meridian, and I deal with it. They usually have NYCB, New York Community Bank, do the deals.
Well, they're the broker too, aren't they? Meridian
Meridian's a
Capital?
broker. Meridian's a broker. Yeah. But I mean, we just refied a deal out right now. We're paying, the rate on that is 3.5, I think it is 3.5%. And we got another deal downtown. That's going to be, that's with a local bank, but it's 2.7%.
What?
Seriously, it's going to be awesome.
Gosh.
Yeah, Ron. Yeah, Meridian. Well, they're in Lakewood, New Jersey. Yeah. They're a great group of guys. Great group of guys out there.
And aggressive. There's one of those guys that has been following up with me for the longest time.
Yeah, you need to call them back. You tell them if you tell them I sent you, they'll give you a free gift.
Okay, love that. Yeah. Well, I'm working with one guy and I've mentioned it to him, but the other guy still finds a way to follow up with me. Like,
they're very, very competitive, and it works out very well for us as buyers. And certain lenders like certain markets too. That's a thing. So some lenders, depending on the area, like NYCB is very, very competitive. They're better here in Ohio than even going Fannie or Freddie. They're just, especially now, because Fannie and Freddie, they want like 1 year of payments up front. So they want 1 year of IO sitting in a bank account, not doing anything. They're tying up all that capital that you could be using to make the property better, right? Whereas New York Community doesn't do anything like that. So that is an amazing thing for us, because they like the area. So when you guys, I don't know where everyone is. I know, I recognize some names. I know you guys, some guys in New York, New Jersey. If you're doing a deal in your market, check with different lenders, because you want to compare the different rates. They're not all the same. And you can also negotiate that too, by the way. You can always push them down a little bit. Let me see.
Yeah, everything's negotiable, everyone.
Everything's
negotiable.
100%. 100%. I always knock some points off that thing. It's never good enough. It's never good enough. All right, let's see. So James is asking here, on your first deal, how do you pay for your due diligence if you don't have the money personally?
Have it come from the investors. Yeah, that's one thing. Or you would have to go, let's say, on an individual basis, go to one of the investors to actually front the cash if you have that relationship. Or so the path that we took is we actually did have the cash, but I have heard of others go to a single investor and then offer them, if they put up the money, then I haven't personally ran into that. So I was just going to mention at a later point, you can wrap in those due diligence costs into the closing costs as a way to push it on to the investors. But from the beginning, I've always paid for that.
Yeah, I mean, that's what I've been doing too. I put on my credit card, I get terms. Usually and that's the thing though, I have relationships with all these guys and I've been working with them for years. So they know it's like, hey, listen, I'm not going to pay you until this thing closes, and maybe they'll charge me interest. Fine, whatever. I don't care. As soon as the thing is paid, I pay them, and away we go. Right. They build it into the cost of doing business. But part of it is that you have to have those relationships up front. That's the thing. But you know what though, James, listen, if you really, really want to do that deal, get a credit card or find a partner. Someone, Ron here wrote, get a partner. Yeah, absolutely, man. Get a partner and just say, can I borrow some money from you and I'll pay you back. You don't have to give everybody equity every single time they do something for you, by the way.
Great point, Augustino. Great point. I love
always demand it. You don't always have to do it. I'd rather use a credit card. I'd rather use a credit card, build the property back. When the property closes, pay everything off and be back to zero. That's what I would do.
And there was one case where this was 118, and that was in Cincinnati, where ended up paying all those not lawyer, but the lender costs, and ended up losing $10,000 because they ended up having to walk away from it. But that was more of tuition and came out of our pocket as a company. And that's just one of those things that is the risk that you could say, yes, you could have pushed that on to the investors. However, that's just not going to be good in the long term.
Yeah. So Jay's got a question here. Do you set any limitation for minimum amounts of units when considering a residential property deal?
75.
75 units. Okay. Good.
And I've always, and I want your thought perspective on that, Augustino. When you're referring to apartments, do you classify? I know it's technically commercial, but do you mention residential?
Yeah, I usually call it residential. Yeah.
Okay.
I mean, I'll clarify it with residential. Yeah, that's. I knew what Jay meant. I knew what he meant. He meant residential units because if people say commercial, it conjures up images of like a storefront. Yeah, that's
exactly.
part of the reason why. Yeah, that's
but
part of. So that's why it's
technically over 5 units, though, or is it over 4? I believe it's over 5 units is considered commercial.
Yeah, I mean, I'm not even looking at deals less than 100 units right now. I just can't deal with it. I almost didn't do a deal because it was 100 units, and I'm like, oh man, 100 units. But it's near another property we already own, so that was off market. We're picking that up.
Bigger thinking.
Yeah. Let me see. Let's see. James is asking, how long did it take to complete your first deal from finding the property to closing?
Multifamily deal?
Yeah, I'm guessing he means multifamily. Yeah.
I would say 8 months. No, actually, yeah. I would say about 10, 11 months, actually.
Yeah, it took a while. It took the same thing for us. It took a while. It's the first deal is always the suckiest one. It's always the worst terms you're going to get. It's going to be terrible. And it's going to be the most expensive compared to like, what you'll do is you're going to buy that deal. And then 3 years later, you're going to be like, what the hell was I thinking? Always.
Exactly.
No matter what.
Yes.
No matter what, you're always doing that. Get a mentor. It's certainly going to keep you from making a big mistake. But yeah, get a mentor for sure. Let me see. Ron says, don't call it on the Sabbath. Yeah, that's right. It's true. Get a partner. Yeah. Why 15-85 versus 90-10, or why not 80-20 or 70-30? Most people do 70-30, I think is what Josh might be talking about. Or like, why do you do 15-85?
It always just reverse engineers to what to give to the partners. And then that really shakes out how to do the equity split.
Okay. Yeah. I mean, and Josh, sometimes you get things really, really kooky if you have so let's say I have a partner of mine. All right. He does an 80-20 split. And in some models, they have like these little step downs, waterfalls, all that fun stuff.
Yeah, that's where it gets super fun.
they get really, really, really complicated, right? So, and I imagine this is why Sterling did it this way, is because by the time everything shakes out, this is what it's going to be: 15-85, straightforward. There's nothing else there involved, right?
Yeah,
right.
Just very simple.
Mm-hmm. Yeah. So it's just a different model to do. And yeah. So, cause I mean, there's one model, most syndicators in the C-class assets that are still, still in the game, I guess they've been doing it for a while. It's usually like a 70-30 split. And again, it varies, right? But yeah, then they have all these other things like, they do have the waterfall, they have an acquisition fee, they have all these other fees on top of it. It usually ends up about the same anyway. It just depends.
Yeah, exactly. Yeah.
Yeah. And also depends on the asset too. Like I said before, the quality of the asset is also going to drive the equity split. If you're getting into a really, really good asset, there's a reason why you're doing that split. Maybe even at a 70-30 or even a 60-40, they're still hitting their target. The LP's happy, the GP's happy. It requires a whole lot more work, and the LP understands that, but they're still getting paid very well. They don't care. As long as they're making their money and they're meeting their own personal target, then they're fine. They're fine.
And sometimes that even comes down to sales, because some people, when they do a 60-40 split, the investor's like, well, why do you get 40%? And they want to see it the other way, to where, well, it's good that we have majority of it and you're getting this small slice. So that's also something that goes into the factoring of things.
That's right. So Ron's asking, do you guys do mixed use? Do you do any mixed use? No.
I just
Okay,
do
yeah.
strictly just multifamily residential.
And all I've been doing historically is strict multifamily, mostly C's and getting into B's and now into A's. I stay away from the mixed use stuff. I recommend if you guys have not done mixed use, you stay away from mixed use. Don't do mixed use. It's again, it's an entirely different animal.
I agree.
If you think about it for a second, everyone on this call, think about it for a second. Have you guys ever seen a storefront vacant and it stays vacant for like a year or
I have
longer?
several. Yeah.
Right. What does that mean? That means that when it's rented, they're like, yeah, look at me. I'm a badass. I'm renting this thing out for $2,400 a month. Yeah. Because for 3 years, it's going to be vacant. That's the reason, that's why it's like, I don't recommend doing that. I just don't recommend it. It's now we're doing a big deal downtown. That's going to be an A-class asset, A-class stuff. It's going to be prime area. I am not the least afraid of that's going to be a smoking deal, right? I already know it. I love that deal. It's going to be just fine. It's technically mixed use, but it's going to be a giant deal. So it's not like what most people do in a C-class area is like a little cafe or a barber shop and 6 units above. The risk isn't worth it. I underwrite it. If you're going to underwrite, if you really, really want to do that deal, I underwrite it minus that square footage. I take it out completely. I count it to zero. And I tell the brokers that too.
It's just cherry on the top.
Yeah, that's it. I mean, and well, why is that? They start like getting all upset because listen, I actually looked at a deal like this. There was 4 storefronts. Only one of them was occupied. The rest were vacant. Well, this is the reason. I point out, look, this is why. This is the exact reason. It's zero. That's why. So, okay. We got Jay's asking a question too. Have you any suggestions for uncovering where investors are hanging out during lockdown other than meetups and BiggerPockets?
I would just start with, are you maximizing on BiggerPockets? I mean, there's well over 1 million people that are on that platform alone versus considering venturing out. And also the local meetups, CIREA, which is Central Indiana Real Estate Investing Association. So many of those to where they would have a normal in-person with wholesalers, agents, other people who are looking to buy properties, investors, is they have taken that online. So you can go on there and start to be a speaker or something, or see how you can be of value or do some type of sponsorship. That way you can get your brand and your face out there. So that's one thing that comes to mind. Yeah, exactly. Jay, listen, it's people got to know who you are, and you have to bring value, right? The same way that Sterling opened it up before, he brought value to someone, and that someone invested in him, invested their time, right? So he was able to convey value, and you do the same thing. It's harder to do online right now, but I think things are getting a little bit freed up now, so it's a little easier to do. Going to the meetups, and when you go to those meetups, you deliver value. How do you deliver value? Talk about something that they don't have. What does an investor need that you have or have access to? Maybe an investor needs a great deal. Maybe an investor needs a way to protect their wealth. I don't know what. I mean, part of it is really understanding what they need and then giving it to them and become, like Sterling said, a subject matter expert, right? What makes you so special? Maybe there's guys in our space that, like Adam Adams, for instance, he talks about marketing. He's a big marketer. That's his thing. That's his thing. Yona Weiss, for him, it's all about cost seg. He is the cost seg king. That's the value he brings, right? And everyone knows him. I bet everyone on this call knows who Yona Weiss is. He does a good job with it. He's a great guy. He's a great guy. So he does all of our stuff, by the way. But bring value, Jay. That's the long and short of it. And also, when you're at these meetups, to not overlook anyone, because you never know who someone may know. And yeah, just treat everyone virtually the same, and don't believe that, oh, this person, they'll never invest with me. You never know what that could turn into or who they may know. So treat everyone the same. It's exactly what I tell myself to when I'm going out networking, that to remain present with each and every person that approaches me or I approach them. Yeah.
When I was a kid, I was working in a warehouse, And there's a sales guy that came up, and he was just very rude to me. I was a young kid. 5 years later, I'm now running a group. This is back when I was a kid in Windsor, Ontario, right when I was still living in Canada. And he wanted to have a private.
You've been everywhere, haven't you?
Dude, I've lived everywhere. And he wanted like a private meeting, and he wanted to sell me all this stuff. And I said, you know what? You don't remember me, do you? I explained to him. I would not do business with him. I told him to get out. Bounce.
Wow.
Yeah.
Well,
I mean, I remember that.
go.
It's like if he would treat me that way as a young kid just starting out, he'll treat everyone like that. Maybe he would. I don't know if he would. Maybe he just had a bad day. I don't know. But you know what? That tells me I don't want to have this guy in front of my clients or in front of anybody that's doing business with me. I don't want that, you know. But yeah, even Carl says, yeah, treat everyone as a future partner. Yeah, exactly right. You know, everyone
Like $1 million.
I have people hit me up on Instagram. Hey, how are you? Hey, can I talk to you for 5 minutes? I'll talk to you for 5 minutes. What you got? You know, I'll share knowledge. I don't mind sharing knowledge at all. You have to be that way. You got to be that way. Yeah. Let me see. Questions. No other questions? No one else has any questions? We're like dropping gold everywhere around here.
I know, right? Gosh.
So Sterling, tell us about your best deal. Like what made your best deal your best deal?
Gosh, I would say the ones that I failed on is the best. Well, one, my very first deal was the best deal because that was like a gateway drug, for lack of a better words. Maybe that was not such a good reference to use, but that's ultimately how I was able to get my foot in the door. So I would say that was one of the best ones. And then also that 118 unit deal, which was the biggest learning lesson on that, was to listen to sellers when they are, essentially telling you, well, having the dialogue. Because one thing is they had owned it for close to 15 years and they had been patching the roofs over the duration of that time. In our underwriting, we assumed that we could patch the roofs too. Not very smart. And with that is we went under contract, paid all the money towards to get the due diligence completed, the lender fees, the engineer to come out, which is close to $10,000. We walked all the units. On the second floor on all those, the ceiling was leaking. It was a common trend. And then finally we got contractors up there and they said, you're going to have to replace all of these roofs. Blew out our budget. And one thing that we also looked to do is we looked at the numbers and said, actually, we can push up these rents a little bit more. So that was another thing, was numbers don't lie at the end of the day. We're trying to be a little bit aggressive. So that was another learning lesson. But in essence, walked away from the deal because the seller wasn't coming down. And the very next deal was able to get the seller, this was 80 units, able to get the seller to replace the roofs, prior to closing. Another learning lesson was to always get everything in writing because they did an overlay versus a tear off. Yeah, yes. So there was only one layer, but of course it would have been better if they tore it off and then put a new one.
Yeah, well, it's cheaper to do it that way, and
Exactly.
watch out for the guys that'll take a pitched roof or whatever and paint it. They'll paint it black to make it look like it's brand new.
I have never. What?
Oh yeah. Watch out. I mean, when you're doing inspections, you're gonna find that out anyway. But there's people that'll say, yeah, it's a brand new roof and it's painted. They just literally just painted it.
Well, it technically still is a new. I'm just kidding.
Right. Oh my God. So James is asking, how do you guys find your investors?
Personal branding. That's always been the route that I've taken. And that goes back to that book I mentioned towards the beginning, is Jab, Jab, Right Hook. So content marketing, that's been my go-to. So posting tons of content, a lot of content. And those of you who are just getting started may, I don't know what content to really start pushing out there. Tell your story, document your journey. That's exactly how I started. And now it's very similar content. I provide case studies of the actual deals. And this is value. And then in return, you start to get reputable, get your name out there, become trustworthy, and then people will decide to invest with you.
Yeah. I mean, you know what, James, everybody's got a story. You know, everyone's got a story, and it's a matter of telling your story. Some people are going to hate you. Some people are going to say, This James guy, James sucks. I don't like James. I don't like the way he looks. I don't like his nose. Whatever.
His face. Yeah, his face.
I don't like his face. I don't know. I don't see James right now, but they're going to say something for one reason. They don't like you, and that's okay. You're not making content for them. You're making content, quality stuff for the people that want to hear from you. That's ultimately what you're looking to do. And it unfortunately, it doesn't take weeks or months. It takes years. I mean,
I agree.
I mean, I've been at this for years, guys. I mean, that's how I do it. I mean, it all started from the very first time I sat down with an investor and said, hey, let me tell you about me and my story. And at a cafe, that's how it started. I mean, I didn't do anything special. It starts with everything starts with the number one, you know, that's how you do it. And there's no shortcut, unfortunately. Even Grant Cardone to do that. You know, everyone does. So Quay's asking a question. Do you do any deals without partners? So using your own bank relationships, etc. That's what he's saying. Like,
no.
How do you do things? So you always use you always use it. Yeah.
I don't know very many guys who don't do that. I've met one guy that was an operator that had thousands of units and I would say under 2,000 units. He had quite a bit. He had a sizable portfolio. That was one person I knew that actually used their own cash. Everyone else syndicates their deals.
Yeah. And I syndicate my deals as well. That's how we do it. And you can grow bigger, faster.
Exactly.
By helping other people get to their goals and you get to yours, right? So if I have an investor that puts into a deal, I'm running the deal. I mean, the one deal that we're doing, I'm actually moving to Cleveland so I can run the deal personally.
You're moving
on
again?
site
What's
every day.
going on?
Yeah, man, I'm moving. I don't even know where I'm moving yet. I already started packing. I don't know where I'm going yet. I've already made up my mind. I'm already moving, right? But it's like, but we can grow faster if you partner up with people to do things all on your own. I mean, sure you can, right? I mean, you certainly can. It's way more difficult and it takes longer to do. And and it depends on your personal goals. I mean, I have some very large aspirations and I will never do them on my own. I need partners. And that's probably one of the biggest mistakes I made when I was a young man is that I want to be the guy. I'm going to do it all by myself. That's how I'm going to do it. And it's totally incorrect, wrong. You need other people. You help them, and they help you back. That's how it works. I was totally wrong.
And speaking on that, I just watched the documentary and finished it. Loved it, by Michael Jordan, The Last Dance. And that's a prime example that he knew if he was going to get to the next level, because he was the scoring, the league leader in scoring. But however, he knew when his new coach came in, Phil Jackson, that, hey, you can go for that. However, if you want to win championships, it's going to be a team effort. And then once Scottie Pippen came on, Dennis Rodman, Tony Kukoc, that's when he ultimately was able to get to 6 rings. It wasn't just because of Michael Jordan, because if he would have kept going that route, you would have known of Michael Jordan, but not for the legacy that he has now with all the 6 rings. That was one of the biggest takeaways I got from that.
Yeah. Well, no, I think here's the thing. Everyone's got greatness inside them. Every single person on this call has greatness. It only gets amplified being around the right people.
Agreed.
And through strong partnerships. I mean, I've worked for companies when I was a young guy too, and there's companies that they were wildly successful. And why was that? Because they just happened to have, just like you said, surround the right team that was put together at that point to make them what they are. The same thing goes in reverse too. It only takes one person on the team to totally suck and see a failed company.
And take everyone down. Yep.
It takes everyone down. So that's why getting the right partner, paramount, 100% paramount. Absolutely. It's just, I've been very lucky. I've had some great, amazing partners. I'm very, very fortunate in that regard. And I'm also picking them very well too.
Fair enough.
I learned some lessons. I learned some lessons when I was a young guy.
One question on that is, I want to jump into that. How do you go about picking your partners?
Some things are very, very simple. Say again?
Or I was saying, what do you look for?
What do I look for? So integrity is one thing. You know, there's let's say it could be something as simple as, hey, Sterling, we're going to meet for coffee, right? At 6 o'clock. Yeah. We're going to meet for coffee at Starbucks. At this Starbucks at 6 o'clock. All right. Super. 6:15 rolls around, 6:30, 7 o'clock, no contact. I message you and I'm like, hey dude, what's going on? Oh, I'm sorry. I got wrapped up with something else. Oh, okay. People make mistakes. Hey, you want to go, let's go grab lunch over here. Oh, okay. I'll meet you there. Happens again. It's something small, but but you know what though? If you're going to get in business with this guy, would you want to?
Or how they treat the waiter at the restaurant could be another thing.
Yeah. Yeah. It's all those little things. I mean, and there was actually a guy that was like that. He was never on time. And that was one of the key things is like, this guy's going to be a problem. And it was
gotcha.
Right. I was correct.
And did you go into a partnership with that? Is that what you're referring to? Or?
Fortunately, it was a very short-lived small partnership. It was just a very small deal. It was an amazing lesson. But yeah, it taught me some different things that I underestimated. But yeah, I don't make those mistakes anymore. Now I am, and again, this was a long time ago, but you learn a lot from those things. Now I look for those things now. If you say 6 o'clock, all my partners, they show up on time. They have
early.
Integrity, very important. Very important to have integrity, even with their personal life. You know, if my partner was running around on his wife, I'd be like, dude, like, what's up? I mean, whatever's personal, I don't care, but it says a lot about what they're about. You know, you don't want to be with someone like that. Okay, let's see here. Where do we find your content, Sterling?
Oh, I mean, you can find me on YouTube. I've got a podcast, The Real Estate Experience, and also on Instagram, Sterling White Official. Any question, you can slide into the DM. I post tons of content. Is a way to, as what Augustino mentioned, it's one thing is about consistency with posting content, but it's very noisy out there in the marketplace. So I'm more of a quantity person, because many people are like, well, I don't want to push out a lot of content because I'm more of a quality person. However, the marketplace determines what is quality. I pushed out content where the lighting was bad. I just did it on the fly, and that's actually did better than the ones that have been more professionally lighting. And so that's one thing I also want to do an experience share with people too.
Yeah. And for me, Bulletproof Cashflow, bulletproofcashflow.com. We're all over the place: YouTube, Instagram, Facebook. Please, if you like our content, please don't forget to subscribe, hit the bell for notifications. Always got to get that in. Let's see. We got a couple more questions here. Any tips for unconventional / unique marketing methods of property?
Yeah, a convention or unorthodox approach I take in terms of direct mail. And one, I will send a Rubik's Cube to an owner, and it'll be just a small note that says, hey, let's figure this out. That's someone who I haven't heard from. So it's just thinking outside the box. Another one, so this is in essence just, what am I looking for? Gag toys, not gag toys, but in essence is, or you can send, if you haven't heard from someone, a small shoe, and then a note that says, hey, looking to get my foot in the door. So in essence is just creative ways to stay top of mind for people. Yeah.
Give them a gift. I mean, a Rubik's Cube is like, well, I think you're all in cost probably $1 for each piece, right? Mail and everything, right?
Sure. Oh yeah, exactly. Yes. And the thing is, it's also, my list is super narrow and targeted too. I'm not like targeting a huge like single family list or anything. And one time I followed up with an owner. He's like, my wife cannot figure out this damn Rubik's Cube. So she's back there on the Rubik's Cube, and guess what he's thinking about? The guy that's interested in buying his property. So it's just the little things like that.
Yeah, that's right. It's giving a little gift like that. That stuff goes a long way too. Let's see. Okay. When you have multiple investors in a syndication, is a PPM required for each? And if so, doesn't it get expensive? Please explain how that works.
My partner more dealt on that side of the business. I do know that when we originally had started and got the documents together, it was more expensive up front. However, since we kept replicating and doing the similar structure, which is more of just changing the splits around, the cost went significantly down.
Yeah. Yeah.
But
yeah.
there is a different, was it PPM per various project?
Yeah. 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 And really, yeah, it depends on if you watch the last webinar we did a couple of weeks ago, we actually had Gene Trowbridge on, and he's
Perfect.
one of the leading guys in the PPM space, or in the private placement space. But yes, generally speaking, if you're syndicating a deal, you're getting a private placement memorandum. It's registered with the SEC, all that fun stuff. I mean, really, as long as you define your splits, you're upfront with your investors. If they're experienced, they simply, most times, depending on how your system is set up, you can either log into a portal, they can just sign digitally and away you go. Or if you're still doing it the old fashioned way with paper, they sign off on a package and then send it back over to Gene, and that's done, right? Or you can even DocuSign it too, right? So there are various ways of doing it. Does it get expensive? If you have many investors in many states, then it has to be registered with the state as well, the state securities exchange. So there's that, but that's usually not a lot of money. But your PPM, all that stuff can get, I mean, it depends on who does it, right? But I mean, a guy like Gene Trowbridge
And how you're
might charge
raising money too.
Yeah, that's right. I mean, that's the problem. If you're doing a small deal, that gets to be very, very expensive, right? That's another issue, because the cost to do a PPM, whether it's $100 million or $600,000, it's the same amount of money to do a PPM. That's why it's like, if you're going to do a deal, go all in, right? That's just go big, try to go as big as possible. But typically, I don't know, like it might cost $15,000, $20,000.
That's what I was going to say, 10 to 15,000.
Yeah, it depends who does it. But I mean, there's guys. There was a guy that I was using a long time ago. He's charging like $7,500, but I mean, it was like riddled with spelling errors. Like he spelled his own name wrong once, man. His name was spelled wrong. And I'm like, it's kind of like, some people have a job. Like if your job is to write stuff, it better be accurate. Anyway.
Well,
we
talked about strengths and weaknesses earlier, so that is not his strength. But
no, writing was not his strength. That's
beneficial.
Should not
beneficial to have someone to complement that weakness.
I guess, yeah, but yeah, make sure if you're communicating with an attorney and he's got spelling errors in his email, find another attorney. Don't save the money.
Simple enough.
Else. Okay, so you got a young me. I think I said his name right. Can non-accredited investors invest with you?
For me, yes. Both accredited and non-accredited.
That's right. It depends on what it is, right? It's whether it's a 506. You're doing 506Bs, right? Or you're doing 506Bs,
Reg
right?
D.
Reg D. Yeah. So, yes, generally
no solicitation.
Yeah, that's right. That's the C. We don't do that, but yeah, I mean, generally speaking, we do the same thing. So, I mean, really, I still like to get to know the person that's going to be investing with us, or someone on our team, get to know that person. So that's important, because when we're partnering with people, we want to make sure that the person coming on is going to be prepared for what's going on. I mean, like, I think that's probably one of Grant Cardone. He does the whole 506C, right? So one person invested like $10,000 and he held back the money for a couple of months during all this Corona
stuff. He was complaining about it. Yeah.
The guy was, but didn't offer any optics to it. He just says, Cardone's not paying me. And then, so Cardone calls him out
all the way up until that point. And then every month. And then the one time I was like, oh my God. Yeah.
But Cardone asked him, I says, hey, listen, I'll give you your money back then. Fine. Whatever. But the point is that you want to partner up with people that are going to be cool, that kind of thing.
That, and also that are in line with your investment. If you're more of a long-term hold and they want to get their cash in, cash out quickly, that's not a good fit. That could end up being a nightmare.
Yeah, that's right. You have to really vet out who your partners are, because some partners, exactly right. Some partners want to get in and out. Some partners are okay with a long-term hold. Just depends. Yeah. Talking and communicating with your investors are key. I mean, we're going to be launching a triple net lease program soon. That's just steady cash flow is all that is, right? That's all it is steady cash flow rolling in, nothing exciting, no crazy refi. It's just steady money. That's all it is. That's it. So, and some people are into that. I'm into that. I like that. Let's buy that. It's just different. Okay. So Jay's asking, what was your most costly mistake?
I would say that one that was 118 unit, which was just under $10,000. That's what I would say. That, and then also I would say not investing in myself sooner on the sales side, knowing that everything is sales, not just in business itself, but even personal life. But we'll stick to the business side, that even though you're buying, you're still selling. I wish I knew that sooner, knowing that everything is sales. So that was a costly mistake, knowing who knows how much I lost from that.
100%, man. I mean, as a matter of fact, what we're going to be doing on Bulletproof is we're doing a 3-day release a week now. Mondays is going to be mindset. Mondays is mindset. Wednesdays is sales and marketing. And then Friday is real estate. So it's like we're still talking about real estate, of course, which is a big part of what we do. But the sales aspect is one of those things that's been largely overlooked, so.
Oh my gosh, huge.
I want to get the message out to everyone that's one of the things that we should focus on, because I'm sure every single person, or at least we have a few questions here about where do I find my investors? Sales and marketing. That's where you find your investors.
Exactly. Yes.
You have to sell yourself. You have to sell yourself. It's what it is. You have to sell yourself. 100%. Cool. All right. Any other questions, guys? No? Okay. Well, Sterling, you want to give one last plug? How people can find you?
Yeah, I would say SonderInvestmentGroup.com.
Excellent. All right. And you're very welcome. I got a whole bunch of thank yous coming in right now for you. So there you go.
No, thank you guys. And great to see that you're taking the time out of, was it Thursday, 7:30 EST, out of your days to listen to us chat and do our personal experience shares and investors in the industry. And I do truly hope that you're able to get value from this, which I know you did, because we dropped absolute bombs and golden nuggets.
Awesome. And of course, we're still creating a whole bunch of new stuff coming out soon. So bulletproofcashflow.com. I appreciate you guys. Just go ahead, check out my stuff. If you like it, subscribe, smash that like button. I read every single comment. Every single comment, I read them. Every single one, even the hate ones too. I get a lot of hate comments once in a while.
Of course, yeah.
All right, guys. Well, thank you so much for your time. Appreciate it.
All right.
Everybody, so thank you all.
Take care.
And I'm gonna